Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency update for November the 24th. So before I jump into the content, please do me a huge favor. Go ahead and hit the thumbs up button on this video, and don't forget to subscribe to the channel if you haven't already. So the first thing that I want to take a look at, guys, is this line chart. This is the daily line chart. There's a lot of lines on this thing, so I'm going to go through it just piece by piece fairly quickly. Not a lot has changed, right? We had this this smaller triangle up here. We came out the bottom of it. We had a couple of bearish retests of the 200 daily moving average. Then we hit this support level over here, bounced up off of it. Of course, we had triple bullish divergence, right? All kinds of things to support that other than the false narrative that it was the China news. Came up, retested the bottom of the triangle, right? Bearish retest, fell under it. Another bearish retest of the 200, and down we went. And you can even see a small bearish retest of the 50 moving average right here. Now we've fallen underneath this support level, and I went long at 6,800, which I talked about, and I said I regretted, getting out of it so soon that I played it for a quick 2% bounce. I still regret getting out of it as quickly as I did because it bounced all the way up to this old support flipped resistance. But again, it wasn't a bad idea to get out, right? I didn't think it was going to pump back up to 8 or 9 grand right away, and it didn't. We had this tiny little bearish retest, and now we've started to move back down. Okay, so when you look at this thing, there's a few lines that are kind of relevant to where we're at right now in the time frame. This yellow line right here, I'm going to make it. Let's just make it green so it's a little easier to see, and we'll make it a little thicker. This is actually the trend line that started in February of 2019, and basically I just connected it here in March and then again in late March, and it created this nice upward sloping trend line. It's fairly steep, but not too crazy. This is the trend line that a lot of people are hoping holds, and this is down right around that $6,800 level. Again, I didn't think that would hold. That's the reason I jumped out of it. I still don't think it will hold, but it might provide some type of temporary support where we bounce back up and test this again, right? Because if you look at this, see how this played out here after this huge dump? There was still this slight upward movement, and then it finally collapsed, okay? So I could definitely see this thing coming back down here and trying to ride sideways for maybe a week or 2 weeks, maybe even 3 weeks, right? Flirting with this 7,400 and then dumping. That's one possibility. The other possibility is this thing does try to move back up to the top of this channel, right? Which would put it up around 9 grand or so. And we talked about that in yesterday's video, how that would be a real gotcha moment for a lot of people because that would actually pump it right back up into this golden short zone, which, by the way, if you're not sure what that is, it's just the 61.8 Fibonacci level up to the 78, okay? And you can see here that they're very, very accurate, okay? Here, pumped right into it and dumped. Then it moved down this way, pumped right into it and dumped. As a matter of fact, there was another one right here, right, where it pumped right up into that on a wick. Very next day, it acted as resistance, and then it dumped, right? So Bitcoin is very, very cliche. People don't want to admit it. They want to act like these movements are manipulation and random. I do think they're probably manipulation, but they're not random. They're bots that are trading this market. There's a lot of bot activity, and that's the reason you see these same things being hit over and over and over again. That's not necessarily a bad thing, though, right? If you can understand that and you can trade, you can try to figure out, okay, what would the bots do in this situation? Sometimes you can get ahead of it, and it's really good for you. So that's kind of, I've lost my chart now. That's what I'm seeing on this daily line chart. If we lose this upward sloping green line, that means we're probably going to lose the bottom of the channel too, right? This downward sloping channel. If we lose the bottom of the channel, guys, the next real level of support is down around $6,200, okay? Which, ironically enough, also lines up with pretty closely to the target of this original triangle, right? Right down here around the $6,000 area. This would probably be a range, $5,900 to $6,200 is kind of the range that I would be looking at. And of course, that level, like I talked about yesterday, it does have historical significance where if you go back in time, that $6,000 to $6,200 level was important back in 2018, okay? I do suspect that if we fall to that level, we would definitely get some type of relief bounce. I could be wrong, right? But I would be looking to fight the trend at that point and probably take some type of long position. Again, on a swing only, right? Possibly even on a day trade only. But not on, hey, I'm going to hodl my coins when this bear market is over, right? Falling out of the bottom of the channel is not the sign the bear market is over. Okay, don't let anybody tell you otherwise. The RSI is severely oversold right now. This is daily. We're down to 24. So again, it looks like it needs to bounce, but no guarantees. This thing got all the way down to 20 back here. So, I'm still personally waiting for it to go a little lower. And if it does, I'll try to find a long setup to play it for some type of bounce. All right. Again, if we fall to the bottom of the channel, 6,000 is the first target to be looking at. And then really, I think first quarter, probably February, maybe March of next year, we could be looking to hit this 4-year trend line, right? This trend line is a long-running trend line. It actually goes way back to 2015. And this is down around that $4,500 to $5,000 area, depending on where it hits it. If you just look at this downward sloping channel, if we stay inside this thing, you can see that it would get down, to this 5,000 or so level in January. And then by March, we'd be looking at like low 4,000s. So some interesting stuff. But don't forget that on the weekly chart, okay, where's my weekly? On the weekly, the 200 moving average is going to be way down there, around $5,000 or so. So we still got to keep that in mind, because that is going to continue curling up, right? As long as price is above it, that'll continue sliding up, gently. So we could get some support on it as well. So that's worth watching, okay? That's kind of long-term stuff. On the shorter time frames, when I look at the weekly, right, I'm seeing that this RSI is down on what I would consider some weak support. It's not really that important to me. I'm not going to place any bets on it, right, or any trades on it. It was support back here in 2015. It was support again here in 2018. But 2 touches, I don't really care that much about it. Just kind of watching it, okay? On the weekly chart, this thing is pretty cut and dry, right? You had a line of support here, it failed, you fell down, you found support here, you bounced, boom, bearish retest, fell down. Now we're underneath this line of support, which again is going to be resistance, right? That's around $7,800 or so. And that lines up pretty nicely with the daily 200 moving average on the CME charts. So this could be a really good place to short. We'll just have to see what price looks like and what the charts look like if and when we get there, okay? Or I should say when and if we get there, because I don't know that we will get there. But I suspect we will eventually, okay? So that's what I'm seeing on the weekly. And of course, I just talked about what I was seeing on the daily. So let's take a look at the 3-day chart real quick, which is right here. Not a lot's changed on this thing. 24 hours, not, the market doesn't move that fast, guys. 24 hours doesn't really make that big of a difference. But one thing that did change is we had this bullish divergence, right, that I was kind of concerned about creating some type of pump. It's gone now, right? This was 35.64, this was 35.97, and now it's down to 35.37. So it's underneath this purple line, which is the line that it needed to hold. It's not closed yet, right? This is a brand new candle, right? So it's got another 2.5 days before it closes. So it could bounce back above it, and we could get some bearish divergence, but right now we don't, bullish divergence. Right now we don't have it, okay? So that's gone. So now what I'm watching is to see if it gets back to this red line and how it acts when it gets there, if it gets there, okay? Again, not a lot's changed on the 3-day chart. 3-day candles, 1-day updates, that's kind of how it is. So that's kind of what I'm seeing on Bitcoin, but what I want to show you guys is something pretty neat. Let me open up just a really clean chart without any lines on it real quick. So if you guys draw, if you're on TradingView and you go over here and you pick out the pitchfork, right, it's in this little drop down here, you might find this interesting. So if I draw it from the top in 2017 to the bottom in 2018, and then I just move it over to the top in 2019, it gives me this nice pitchfork, right? And this basically gives us some lines of support / resistance. And if you zoom in, especially if I zoom in, let's look at a daily. Look at this thing. Let me get it lined up here. So now I've got all the lines lined up, and look at this thing. If you'd have drawn this out, this first dump came down right to this level, bounced off of it, right? Found resistance here, came into this level, bounced off of it, found resistance here, came down, support, up, right? Just look at this. I mean, this thing has played out really, really well, okay? And it is. It's just been a downward sloping channel. And then here, back in September, we touched this perfectly, right? Got to bounce off of it. Then here, we rode along this line of support, fell underneath it, and once we lost support, it collapsed down to the next level. Yeah, it had a tail that came down through it. Look, it found support there temporarily. We're back under that level, so that's kind of one reason I'm thinking, hey, we might fall down here to 6,200, right? Because if you look, that's right around where this line is right here, 61, 6,200. And if we're looking at that, that'd be sometime this week that we might fall down to this level here. So this pitchfork is a pretty neat tool. Again, I never take a trade off of one reason alone, but it is nice to kind of see, okay, this thing has played in this range, right? And if it loses this, where's it going? If it finds support here, then it might bounce back to here, right? You can just play these ranges, find other reasons to support the trade. And then even if you're not taking the trade, maybe you're just waiting to buy Bitcoin, or maybe you've sold some Bitcoin, whatever the case is. It just helps, right, with anxiety. If you know that, hey, the market's not random, right? It is following some type of logic here. We may not understand the logic all the time. It may surprise us at times, like with the height of this pump right here. That definitely caught me off guard. But it is following some type of logic, okay? So that's kind of the Bitcoin update, and that's the Fibonacci pitchfork if you guys are interested in using that. What I want to talk about next is the altcoin picture. And the first thing I'm going to talk about is the total market cap, right? This is the total alt market cap. This thing looks rough, guys. What we got this collapse down to support, and it bounced off of it. And I thought for sure that it was going to get a better bounce than this, but it didn't, right? It just did not. I really thought it was possible that this might bounce all the way up to 70 billion, right? Outpace Bitcoin a little bit, lower Bitcoin's dominance. It just didn't happen. And again, I mentioned in the videos, I'm not going to go long on altcoins because even though it looks like it might have a bounce due, it's just not worth the risk. And here you go, right? This is why. It bounced up to this level, and if you look, all that was support, flipped resistance, it failed, and now we're underneath this key level of support. We have not been underneath that level of support since the rally started. This is basically a new yearly low since this rally started, which means we've now retraced 100% of the gains, and we're now back in the negative on the total alt market cap. That is not good, right? That's definitely not good. So now what we have to watch is how strong of a line of resistance is this yellow line going to be? Is it going to be that it's just a false break under it to try to shake some people out, and that we're going to bounce back up and maybe get back up to the 70 billion? Or is this legit and this just completely failed to support, and this is going to be resistance? Okay, and if this is resistance, I talked about this more than a month ago. The next level down from there for altcoins, you have a gap sitting down at $41 billion, right? Way down here. You have a small gap sitting here at $47 billion. So those are both legitimate targets for altcoins, which means altcoins could bleed another 50% as a whole, right? It's not good, but it is possible. If we take a look at Bitcoin dominance, I did find this interesting. I did a video yesterday talking about the 200 weekly moving average. Well, this is the 200 weekly moving average for Bitcoin dominance. And if you look, we actually tagged that this week, right? We have it closed in about 6 hours. So we tagged it this week after falling underneath it, and this is a bearish retest. So technically speaking, this means that alts should gain on Bitcoin, right? Will they gain on Bitcoin? Who the hell knows, right? Who knows? But they should gain on Bitcoin. So what that means is alts, may not gain dollar value. They may lose fiat value if Bitcoin loses fiat value, but they should gain Satoshi value. So if you're trading and stacking sats, alts might be a good place to look right now. Me personally, I'm not. I'm stacking dollars, and I only stack Satoshis in a bull market. It doesn't make any sense to me to try to accumulate an asset that's in a downtrend, which is what people are doing when they trade for Satoshis. But I'm not here to judge anybody. To each their own. But this definitely does look like it's due for a dump, right? So again, the timing is pretty suspicious. It's right around the same level it was in December of 2017. We're coming up on December of 2019. It could be that this thing does collapse, maybe goes all the way back down to this level here. And that would be really, really nice, right? For people who are holding altcoins, even if for no other reason that they could get out of them for Bitcoin, right? If they want to get back into Bitcoin. So that's kind of what I'm seeing on altcoins. So with all that being said, guys, please remember I am literally some guy sitting in a spare bedroom. So nothing in this video is financial advice or trade advice. You should always do your own due diligence before making any type of investment in cryptocurrency. If you haven't already, be sure and give this video a thumbs up, and don't forget to subscribe. This is James with Crypto Common Sense. Trade safe.